Welcome back to Squawk Box. Social media has brought so-called crowdfunding to the world of investing. With more on this, we're joined by Robert Shiller. He's a professor of economics at Yale University. He's also the co-founder of the S&P Case-Shiller Index. And we have come together, Professor. We are soulmates now because we need to we at least need to point out the benefits of entrepreneurship and free enterprise. And we can talk about some of the details, obviously, and we've been through a tough period the last 4 or 5 years, but we both at least agree that free enterprise is a positive thing. Now, with that in mind, I look at the reaction to this jobs bill that was passed, the one called the jobs bill. And the president was there smiling with some Republicans. It was a little bit bipartisan. But you've seen the reaction from things like the Huffington Post, just the complete ire raised by this bill from certain constituents on the left. You go back all the way to 1811. That's first the New York corporate law, which made it easier to incorporate and the limited liability for investors. I bet you that was met with the same type of response when it first came out. But it's been since then, it ushered in the democratization of Wall Street, right?
Right. Yeah, the issue is, I guess, freedom for the people. But if you give people freedom, they might mess up and make mistakes. Well, I think we have to allow that. That's how we have a vibrant society. It's deeper than just business. It's about everything we do.
Yeah, I mean, we have to make individual decisions at some point, and we have to be allowed to fail. Otherwise, there's no such thing as earned success, and earned success is what really makes it worth living, I think. So what was in the Jobs Act? You didn't mention it in your book because the Jobs Act wasn't already done, but we're talking about what is called crowdfunding, right? Now, was that one of the things that the far left really disliked about that bill? Or, I mean, I saw that this was going to usher in 1,000 new Madoffs, this Jobs Act.
Right, that's the worry. That's the worry. But I think it's exactly the same worry when they launched Wikipedia. You think that a free online encyclopedia, a wiki, would generate 1,000 phony articles, right? People with reasons to produce some nonsense would put articles up. But it hasn't happened on Wikipedia. So we learned something about crowd encyclopedia writing.
But Professor, I'm going to take the other side of it, and we have Jim Chanos here. I could argue that this crowdsourcing, this crowdfunding, is going to ultimately lead to the recreation of the old boiler rooms. It's going to give Mr. Chanos an opportunity to find lots of companies that are ultimately frauds.
Well, the Jobs Act limits the damage because you're not allowed, if your income is under $100,000, you're not allowed to put more than 5% or $2,000 in. So, okay, you might lose 5% of your income. I think that is not devastating. The real problem with the boiler rooms back in the 1920s is they wiped people out.
But this is ultimately, by the way, about the retail investor. It's not about the institutional investor. It is about taking mom and pop's money and putting it to work. And I can see why that could be a good thing in terms of being able to access capital, but I can also see the other side of it.
See, I think it's going to be a cultural change. It's not just one. This is one step. America has prided itself as the most entrepreneurial country, but we never really got it disseminated through the population. It's a minority who actually invest actively. But I think that it'll empower us. We'll be thinking more about what's going on. It won't be leaving it all to the government or to big organizations. And it's really important that we democratize Wall Street, and that's what this is doing. But that's what we should be doing.
Chanos is shaking his head here.
But Professor, I mean, is it wise to do it on the back of less disclosure? And that's really, I think, one of the arguments that concerns me is that a lot of these companies will be coming forward. I'm all for letting companies raise money in the markets and read the prospectus and pay your money and take your chances. But if we don't have good disclosure, which is one of the good things that came out of cracking down on the boiler rooms of the 20s, the 33 Act to the 34 Act, are we taking a step backwards? We already have a problem with retail participation in the equity markets because people think the game is rigged.
I think that this Jobs Act is an experiment. And like anything else, it depends on a social reaction. and how people learn from each other, how the internet develops, how information starts to develop. it could be that it works out badly. But the other side of this is if we require extensive disclosure, that's going to kill small business startups because they can't afford that. So there's a difficult trade-off, and we're experimenting with it. I'm optimistic that we'll learn something positive that will allow for more small businesses. But you're right, there are issues and worries.
Professor, where are you? We've talked so many times about animal spirits, and you haven't updated us on where are we in let's just talk about here in the U.S. in terms of animal spirits. Is it good? The market's up. Is the market up because we feel better and the animal spirits are being conjured up, or is it up because we have all this extraordinary Fed action that we've seen over the past?
The stock market is up since 2009 because of an extraordinary growth of earnings. The question to me is whether that's sustainable. Some part of that was cost cutting. And then there are still risks in the future that people are still weighing on them, like the risk of further declines in home prices. There's likely to be millions more families evicted from their homes because of non-payment on their mortgages. And there are other, there's things in the horizon that might disturb things. And people are ultimately still a little bit anxious and are iffy. So the animal spirits are not back to 2005 levels.
Was that too much? Did we overshoot then? Or?
We way overshot.
Well, is it too hot, too cold, or just right now?
I'd say it's too cold. Our sweaty palms is the symptom we have right now, and it's not encouraging. The employment population ratio is kind of stuck at a bottom at 58.5%. That's a sign that while the unemployment rate is down, jobs aren't there, and that is a chronic, smoldering problem that is weighing on people's psyches.
And you're not convinced that we're not done with housing yet? We still got work to do there, too.
Well, our S&P Shiller home prices indexes have been falling. Now, basically, they've been falling ever since 2006, with a brief interruption, after the first-time home buyers tax credit. But they're still going down. Now, they may turn up. I don't know. It's not obvious. They're not going down at the rapid clip, I don't think. But the problem is if they go down much more at all, we're going to have a worse housing problem, and it's going to hurt the banks and the mortgage lenders.
All right. Well, thank you, Professor. We'll see you again soon, hopefully.
Yeah.
Okay. Thanks. See you.
All right. When we come back.